Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Big day, given the fact that we are counting down to the RBI governor's speech at 10 a.m. Of course, consensus estimates are that the RBI will hold fire when it comes to interest rates for a 6th straight time. But of course, it's the tone that will be, watched out for by the street, whether or not there's a dovish tilt to it or not. But of course, global cues positive, and of course, lots of stocks in focus. And of course, we'll also be taking up all your stock related queries. So if you have any queries, keep them coming in on our YouTube feed. We'll try and take them up. But before we move any further, let's take a look at the top headlines at this hour. Wall Street rallies on the back of strong earnings. The Nasdaq hits a record high led by Nvidia and Microsoft, while the S&P 500 is within kissing distance of the 5,000 milestone. Asian markets also rise, with the GIFT Nifty hinting at a start above that 22,000 mark. Crude prices rise as Israel rejects truce terms proposed by the Hamas. Brent is back above the $79 a barrel mark as lower production from the United States also pushes prices higher. The RBI will announce its monetary policy decision in a few hours from now. The Monetary Policy Committee is expected to hold rates steady for a 6th time. Stance is also likely to stay the same as withdrawal of accommodation. Tata Consumer Products revenue and margin beat estimates, but an exceptional loss leads to a profit miss. Power Grid's profit and margin too beat street expectations. The company has also raised capex guidance to 10,000 rupees. In key earnings to track, Apollo Hospitals and Grasim from the Nifty will report third quarter numbers. Also watch out for numbers from LIC as well as Zomato. Well, without any delay, let me bring on board our guest for today. Joining me, Sunil Subramaniam, MD and CEO of Sundaram Mutual. Great to have you on the show, Sunil. I want to first get in your thoughts on, what the market setup is looking like to you, given the fact that, we are not being able to sustain at higher levels, A, and B, the action has, of course, been in the mid-cap end of the markets, with the mid-cap index hitting fresh highs on a daily basis. The consensus view is that, it may be time to be invested in large caps more, given the fact that they have more catch up to do. Would you concur with that thought that, the tilt should be towards large caps in your portfolio now?
I agree with that. And the reason for that is that, the reasons that the mid cap and small caps are doing better in terms of price performance is three factors. So first is the fact is that there's a strong SIP book which is coming into domestic mutual funds, and almost 30% of the SIP book is in mid and small cap. Another 30% is in multi-cap, where you can roughly say half the allocation will be mid and small cap. So if 40 to 50% of the flows of domestic mutual funds from an SIP book perspective are in mid and small cap, they don't have much leeway to use that money to buy large caps. That's number one. That's the flow related issue. Second is, if you look at the earnings season so far, I think the large cap pack has delivered about 20%. 80% of the large caps have reported. Though mid and small caps have reported only at about 60 and 50% in terms of the thing, their earnings results are better than the large cap. There are about 30 to 40% earnings growth that we see. So the domestic economic story is reflecting in the mid and small cap EPS growth through. That's the second reason. The third reason is that FIS, who brought in almost 70,000 crores in December, have pulled out about 25,000 crores in January. And this is nothing related to India. Yes, there is some profit booking, but it's also because the expectation of a rapid rate cut in the US is now slightly on pause. We're talking about 3 rate cuts, and the economic story there is looking stronger. And you saw today that even the tech stocks there are doing well. So when you have a reallocation of capital, maybe some of the money is going back into the US stock market because it's a risk-free market. So there is some money pull out from the FIS and the large cap. While mutual fund managers would love to buy large caps, the fact is the flows are coming in mid and small cap. But to the extent of the multi-cap, I see a reallocation of the portfolio because valuations in the mid and small cap, as of end Jan, I think the small cap index is at a 22% premium to large caps, and the mid cap is about 14 to 15% premium. So obviously, such a high premium means that the margin of safety is less, right? While mid-cap earnings could come and justify this, the potential for a further upside, and you correctly captured to say that with the selling by FIS in large cap, there are pockets there which are looking attractive now, and I would expect mutual fund managers to shift their multi-cap allocations more in favor of large caps. And hence, I would say from an investor perspective also, there's a margin of safety in large caps is higher today. And I would say that given that they also participate in the Indian growth story, right? So you can definitely look at a slightly larger allocation to large caps compared to mid and small caps at this particular point in time from a valuation perspective.
All right. Of course, stay. Increase your allocation to large caps at the current juncture. But of course, it's a big day when it comes to policy decision, right? What are you expecting from the RBI? Of course, headline rates are expected to remain the same because RBI, of course, cannot precede Fed when it comes to rate cuts, right? But when it comes to stance, do you expect the RBI to tinker with that, or do you think that could come only in the April policy?
Yeah, I expect that not to come even in the April policy. I'll tell you why. Because domestic inflation trends will be known only with the monsoon. Because India is a supply-driven economy, right? Inflation is largely 60% caused by supply-driven. And one is oil, which is unpredictable. You'll have to keep continuously monitoring oil. But oil at the current $79, $80 level is a comfortable level, not an issue. But come the monsoon's initial forecast in June is when you'll get a clear print and read on the inflation part, right? And as far as growth is concerned, there is no slowdown in growth in India for RBI to look at a rate cut to support growth, right? And like you correctly said, if the Fed is delaying its rate hikes, there's no need for RBI to jump into it. And bear in mind that when the Fed raised rates, they raised it by 550 basis points. The RBI only raised by 250. So there's enough room, even if the Fed starts cutting, for the RBI to be more pragmatic and practical and not just toe the Fed line, right? It's also probably more driven by the currency impact. And if, from June, you're going to see the bond index inclusion, which means more dollars can come into the debt market too. So if you're going to get FII flows coming back from equity and debt, then you're going to see that the currency is going to get support from inflows. So RBI has a lot of factors to consider, because I would put currency management as a greater need for a rate cut or otherwise, as opposed to inflation. And it's nowhere near coming to the 4% target of the inflation. So I think that a pause in both in terms of the rates as well as in terms of their outlook, right, which is what a slightly tightening outlook, I would expect them to retain that and give out a lot more data on what their consumers expect and all of that.
Right. What are your thoughts in terms of private sector banks that have been underperforming, particularly HDFC Bank? Would you take a contrarian call and advise investors to look at an HDFC Bank right now? What are your thoughts?
I can't talk stock specific. Regulators don't permit me to speak. But overall, on the private sector bank part, right, I think a lot of the selling was triggered by that SEBI rule in terms of the ultimate beneficial ownership, right? So there was a lot of strong positions there which had to be unwound. So it's partly a tactical call. It has nothing to do with the fundamentals of the bank or anything else. Well, that's one thing. The second aspect here is that I would still keep private sector banks as a safety component of my portfolio, right? Yes, relative to the fact on what drove their growth in the past few years, which was the NIM expansion, because they had low-cost funds raised during COVID and the lending rates were going up. So there was a NIM expansion happening. Second, there was a easing of the NPAs, and NPAs were coming down sharply. And the third is that retail lending was the need of the hour, and it was growing very strongly. Those three factors have got slightly dampened because now the NIMs are no longer expanding because the old money has got used up. The new money is being raised at higher cost. So NIM expansion further is not likely. Similarly, the NPA, I think all the good news is now in the book, right? The NPAs have come down. Further, marginal reductions can be there. So it's kind of a stable NPA kind of situation. But third, in terms of retail lending, bear in mind that RBI brought in because they were worried about these personal loans and credit card loans, which in a way maybe are being fueled into the stock market or something like that, because you don't see consumption numbers really shooting up that way, right? So to that extent, though housing loans are partly responsible for that, but the additional risk weightage that RBI brought in meant that private sector banks were more impacted by that in terms of the adequate capital required, additional capital required to support a personal retail lending book. So to that extent, their profitability for the future was not looking as rosy as it was, say, 6 months ago. So there's a natural correction in terms of adjusting it to the new normal, right? But nothing wrong with them. There's no bad news on the private sector banks front. So I would continue to hold private sector banks. Yes, public sector banks have tended to look better because one, they're historically at a great discount. So there's always a valuation catch-up story at play, number one. Number two, they are largely corporate lenders. So the capex cycle revival, which should happen at the later half of this year, will see them benefiting because they are more natural corporate lenders. And the third is the fact that the government is going to borrow less as per the vote on account budget that they put up, means that the easing in the yields means their own SLR book, which is far in excess of the required, will see some mark-to-market gain. So tactically, public sector banks are probably looking better. So there's some reallocation of capital from private sector to public sector, which has also happened. But that by all being said, I think from a medium-term perspective, private sector banks remain a key part of the portfolio, and I would use every correction as an opportunity to keep adding them to my portfolio.
All right, that's the view on the private sector banks. But last question really, have you made any changes to sector allocation post the interim budget? Should one really stay invested in PSUs? Do you think the markets are ignoring some kind of downside risk to PSUs? Or do you think PSUs are on an upward trajectory, given the fact that, of course, private capex is also expected to pick up, as you said?
I don't see PSU banks are a different story. I continue to remain bullish on good quality PSU banks. But non-banking segment, the other PSUs, right? We have been very surprised with the kind of rally that's happened. And we do not believe it's so much due to a fundamental profit expansion expected as much as a valuation catch-up story, because historically they've been at a discount. So we are very wary. We do have a decent allocation there, but I won't go extremely bullish on the PSU sector. And I think that I'd like to see far more concrete evidence of a professionalization, of maybe a privatization, or those kind of. So even disinvestment, the government isn't talking great numbers for next year too. So to me, I think it's more the sector in which the PSU, based on which I will look at the private versus the public and see if there's a significant valuation gap, then maybe I add a little more PSUs to go. But in quite a lot of cases, their price rises have meant that the gap has narrowed sharply. So I would be on a wait and watch mode and be very stock specific when it comes to the PSUs other than the PSU banks. On PSU banks, good quality banks, I believe is the time to accumulate.
All right, that's the view then. With that, I'm afraid we are running out of time. Sunil, thanks a lot for taking out time and joining in. It was a pleasure interacting with you this morning.
Thank you.
Well, with that, let me also bring on board, Vaishali Parekh of Prabhudas Lilladher, who's been waiting by patiently. Great to have you on the show, Vaishali. What is the setup looking like today, given the fact that yesterday, once again, we gave up the 22,000 mark. Even this morning, GIFT Nifty hinting at that, at a reclaim of that level. But do you think, those kind of levels will really sustain? Because we haven't seen that happening over the last couple of weeks.
Very good morning. Yes, actually, market has been a bit sluggish after we saw an up move coming in the recent past. But I think the levels are still intact. We are looking at 22,200. And for today, of course, it could be a choppy move, and we would wait 21,750 would be the support. But what is bothering right now is Bank Nifty, 45,500 should be held on, because we are seeing corrective move, weakness seen in private sector banks. So let's wait and watch as far as banking sector is concerned.
All right, that's the view then. But let's talk about some of the stocks before I start taking viewer queries. Mankind Pharma, one stock that has been focused, promoter entity may sell 1.6% via block deal. Floor price has been set at a 3.7% discount to the current price, and the 90 days, the seller will have a 90-day lock-in. Offer size somewhere around 1,300 crore rupees or thereabouts. On the charts, Mankind, where do you see the stock heading?
So I would say it is continuing to be in its upward trend, and for now take 2000 as support level. And from what we've been seeing, there's not much of a volume pickup and all, but of course if these support levels are intact and we see some follow on buying, we would expect this stock to go towards 2250 to 2300 levels.
Another stock that's in focus is Trent. Stellar set of numbers. We saw it, reflect in the stock prices as well. This morning, we have a brokerage call as well on this particular stock. Jefferies has a hold rating. Target price has been raised to 3,500 rupees per share. Of course, third quarter earnings were significantly better than expected. And Jefferies has noted that, they had underestimated the ramp up in Zudio as well as the execution, where the management is concerned. It has sharply raised the EPS forecasts for the stock as well. But do you see a lot more momentum on the charts of Trent here on?
Well, it's actually hard to tell because we've seen a one-way rally. It is a relentless stock. The upward move doesn't just stop. So I would say, but having said that, I would say that yes, I'm seeing chart of all periodicities. It's in a highly overbought zone. So I don't say that there would be any weakness, but those who are holding this stock continue holding with a trading stop loss or at least book partial profit, because I think yesterday's candle, the move that we've seen yesterday has been too good. I don't see any upward move coming in today. So there could be some profit booking coming in at this juncture.
All right, expect some bit of profit booking on trend, but you can continue holding on. I saw a query on this particular stock from Naveen. Hope that answers your query. The next stock in focus would be Nestle. The numbers came out yesterday. We have a query coming in from Yagnesh on this particular stock. He said that, of course, the numbers have been mixed, but what are the levels to watch out for over the short to medium term? On the charts? Nestle, yesterday it was up somewhere around 2% or thereabouts, but over the last 5 days it has been pretty much directionless.
Yes, actually it has been consolidating. So after we witnessed a high of 2750 levels and now it's been consolidating. So well, it is at a make or break zone, and I'm seeing that yes, consolidation. So 24,400, 24,00, should hold as a crucial support level. And if this stock surges, goes above 2550, I think we can see a further up move going towards 2650 to 2700. But if 2440 breaks, then it's calling for a further profit booking. So let's see. Yesterday's candle is quite convincing. Good volume pickup. So 2440 should be taken as support and look for a target of 2600.
All right. That's the view. Hope that answers your query. Next query on Hoodco. This one is coming in from Kamal Hassan. And he wants to know your thoughts on this particular stock. Yesterday it cooled off a bit, but it has had a fairly good run. Would you advise investors to, in fact, traders to look at buying on dips, or do you think it is in the overbought zone at the current juncture?
Well, there is some profit booking what we are witnessing, but I would say the way these stocks are moving, I would say yes, 188 should be kept as a stop loss, even for a fresh entry, which would make a favorable risk-reward ratio. And if the trend is to continue, I think one can get ready for a target of 230, 240. So 188, it's a calculated risk. Go for it.
All right. Those are the levels to watch out for on a Hoodco. Next query coming in from Tapan Thakkar wants to know your thoughts on Prakash Industries. He's holding 800 shares at a price of 188. Now the stock is at 209. So he is making some bit of profit. Would you advise him to stick on and wait for some upside, or do you think partial profit booking is something that he could look at?
So I would say keep a stop loss of 203. And there is nothing wrong with the stock for now. I think this still has some further upside potential. Can go to 220 levels. So very small strategy. Keep a trading stop loss of 203.
All right, trading stop loss of 203 on this particular stock, Prakash Industries. But the next query coming in on an NBCC India. This one is coming in from Mohammad Imraj. He wants to know your thoughts. Of course, given the push for affordable housing in the budget, NBCC India has, of course, seen a very strong rally come in. In the last 1 week, it is up somewhere around 17% or thereabouts. Do you see more steam to this up move?
So when I see the longer term period for an investment for a longer period of time, I think the stock is ready for a target of 170 to 200 levels. So I would not say it's a bit risky to buy at this juncture. Wait for a dip around 145 or so. If you're holding, keep your trading stop loss. And if you need to buy, 145 should be the level that one should watch for, 145 to 135. That's the support band, what we are seeing right now. That is the level which one should go for to start accumulating the stock for higher targets.
That's the view on NBCC then. But what about an SBI? Top Nifty gainer yesterday, almost 4% kind of an uptick coming in. Ahead of the policy, how would you really position yourself in some of these PSU banking names? Because we saw, IOB and some other, PSU banking names clocking a very healthy up move yesterday. Positioning here?
Clearly, SBI gave a breakout yesterday above 660. So that was the level. It opened strong and it sustained higher. So that was a good buying indicator itself. Above 660 was a level to watch for. And now we are looking at a trading target of 685 to 690. Well, as a positional trade, one can look for a target of 720. So this is how I would plan my strategy. It was a good buying opportunity yesterday, and which I'm sure many would have taken.
That's the view then on some of these banking names. What about Mazgaon Dock at the current juncture? What is the chart setup looking like there?
so it's really nothing happening much, but I would say it's consolidating. The trend is intact. 1990 should be the level to watch for. That's the support. If that support breaks, then it is negating the trend, the bullish view. Till then, I think keep accumulating.
That's the view. Keep on waiting. But Paytm, I can't not ask about that stock. Yesterday saw a very good rebound, 10% kind of up move. We have a couple of queries coming in on our feed as well on that particular stock. Trader's delight, would you call it that?
Well, it's a risky play. I mean, of course, calculated risk-reward ratio turns out to be favorable. Less to lose, but more to gain if once there is clarity and all the compliances are met with.
Okay, one more stock, Yes Bank. Very strong volumes. We've seen the stock on an upward trajectory, stellar up move. Here, how's the setup looking like? Do you think more upside looks possible, or do you think it is entering the overbought zone now?
Well, no, this is the hot topic right now. I mean, Yes Bank has been the flavor in last few days. So I would say actually, technically, I think it's looking ready for a big move on the higher side, of course. So it's given a breakout also, and with very high volume, we've been witnessing very good volume in the past few weeks. So I would say keep accumulating the stock with 2350 as support, because the stock is likely to do 33, 36 levels to start with. And then we can have a relook. Of course, we have a projection of 55, 60. But for that, first, it needs to cross 33, 36 levels. Yeah.
All right, those are the levels to watch out for on Yes Bank. For all those who had queries, I think I saw some queries, but I lost you guys on the feed. So those are the levels to watch out for on Yes Bank. But I think with that, we've come to the end of the query segment. Before I let you go, Vaishali, what would you be flagging off in terms of stock recommendations for viewers this morning?
So, well, as we spoke about SBI looks good even now. One can buy for a target of 685, 690. We closed at 675. So that would be a small trading strategy for now. And the other one which is on my radar is DLF. So DLF also gave a breakout yesterday. Buy it a bit in decline because 810, 815 was a breakout level. We've closed pretty strong. So I think we are looking for a target of 880. So this is one stock to my liking right now.
All right. Those are the recommendations coming in from Vaishali this morning. With that, Vaishali, thanks a lot for taking our time and joining in, sharing your thoughts, as well as addressing all our viewer queries as well.
Thank you. Pleasure.
Well, with that, we've come to the end of this edition of Morning Trade, but just a programming note, big day, on the policy front, RBI governor's speech at 10 a.m. and then post-policy analysis with a battery of guests at 10:30 a.m. Of course, you can't afford to miss that. Money Control is the destination. You need to be 10 a.m. onwards, so don't forget to tune in. But for now, it's a goodbye from me. Thanks a lot for tuning in. Stay tuned to Money Control. Lots coming up on the other side.